You worked with a client who bought a home 2 years after a bankruptcy. Most people assume that's not possible. Tell me how it happened.
She bought a $490,000 home 26 months after her bankruptcy discharge. It was a clean transaction funded in 24 days on an FHA loan with 3.5% down. Most people who go through bankruptcy assume they're out of the housing market for 7 years, but FHA gets you back in at 2 years with just 3.5% down, and almost nobody tells them that.
Who is this video actually for? Who needs to hear this?
Yeah, this is really for two groups. First, anyone who's been through a bankruptcy, foreclosure, short sale, or deed-in-lieu of foreclosure in the last 1 to 7 years and has been told by a bank, by a well-meaning friend, by something they read online, that they will have to wait years before they can buy again. For most of these buyers, the real answer is FHA, not some exotic program, and the timeline is much shorter than they think. Second, agents who have clients in this situation. I get calls from agents constantly who say, I have a buyer who went through a foreclosure 3 years ago and I don't know if they can buy yet. In a lot of these cases, they're already qualifying for FHA, and the agent just didn't know the government loan timeline is that short. The conventional wisdom about credit event waiting periods is based on conventional financing. FHA runs on its own, much shorter clock. And for buyers who went through a credit event during a genuinely difficult time in their life, a medical situation, a divorce, a business that failed, FHA is usually the fastest legitimate path back, with non-QM loans as a bridge for a small number of buyers who can't even wait that long.
Tell me the full story from the beginning.
All right, so she came to me through an agent referral, early 40s, worked in the healthcare administration. She'd gone through a Chapter 7 bankruptcy about 2 years prior. Just a combination of a divorce and medical debt that accumulated over several years. By the time she reached us, she'd spent the intervening time rebuilding. Credit score was back up to 660. She had stable employment, 2.5 years at the same employer, W-2 income. She had saved about $35,000, and her bank told her she needed to wait 4 more years before they'd consider a mortgage application. That's the conventional loan seasoning requirement for Chapter 7 bankruptcy, 4 years from discharge date. What her bank didn't tell her, because they only offered a conventional, is that FHA allows a Chapter 7 bankruptcy after 2 years from the discharge date, not 4. 2. And with a 660 credit score, she qualified for FHA's 3.5% down payment program. Her discharge date was 26 months before she even came to me, so she was already past the FHA's 2-year threshold. We ran her application, she was approved, and we went under contract on a $490,000 home in a Denver suburb that she'd been watching for months but didn't think she could buy. We funded 24 days after going under contract. She was in the house in just over 3.5 weeks. So you see, the bank had told her to wait until 2028, but she moved in during 2026 with an FHA loan at 3.5% down.
Walk us through the actual waiting periods: conventional, FHA, and non-QM.
Okay, so for conventional financing, the Fannie Mae and Freddie Mac programs that most banks and lenders use, the waiting periods after major credit events are enforced. Chapter 7 or Chapter 11 bankruptcy, 4 years from discharge date. Chapter 13, 2 years from discharge date or 4 years from dismissal date. Foreclosure, 7 years from the completion date. Short sale or deed-in-lieu of foreclosure, 4 years. These are not negotiable on a conventional loan. If you're within those windows, a conventional lender will decline your application regardless of how strong anything else is. FHA is where most credit event buyers should actually start. Chapter 7 bankruptcy, 2 years from discharge. Foreclosure, short sale, or deed-in-lieu, 3 years from the completion date. Down payment as low as 3.5%, and FHA rates are competitive. This isn't a consolidation prize, it's a mainstream program. The only reason to look past FHA is if you're still inside FHA's own waiting period. That's when non-traditional or non-QM loans come in. Non-QM programs can go as early as 12 months after a credit event in some cases, depending on the borrower's specific situation and compensating factors. But they carry a higher rate and typically require a larger down payment, often 20% or more, because they're pricing the risk of buying before FHA's own clock is run. So you see, the order matters. FHA first, the moment you're eligible. Non-QM only as a bridge if you need to buy before that FHA window opens. And in many cases, a borrower who starts in non-QM can refinance into an FHA or conventional financing once the seasoning clock runs out, capturing a better rate at that point.
What do buyers in this situation need to be doing during the waiting period to set themselves up?
3 things that matter significantly that buyers often don't prioritize. Number 1 is credit building. Most people don't know that they should work on their credit after a bankruptcy or foreclosure. What most people don't know is that lenders want to see an active, positive trade lines, credit accounts that have been open, used, and paid on time, a secured credit card, a small installment loan, a car payment. 3 active accounts with at least 12 months of on-time payment history is typically what lenders need to see. Just having old accounts go back to good standing is not enough in most programs. Number 2 is employment stability. 2 years of continuous employment in the same field, documented with pay stubs and W-2s, is a significant compensating factor for a borrower who had a credit event. If you changed jobs or had gaps during the waiting period, we can still work with it, but steady employment history is one of the most powerful things you can demonstrate. Number 3 is savings. Even a relatively small reserve, $10,000 to $20,000 after the down payment, signals to an underwriter that the credit event was circumstances rather than a pattern. You don't need to save a large amount. You need to demonstrate that you're financially stable now.
What's the mistake people in this situation make most often?
A common mistake is accepting the first answer they get. A buyer who goes through a bankruptcy and calls their bank is almost certainly going to be told the conventional timeline, 4 years, 7 years. That's not wrong for that bank's conventional programs, but conventional is not the only door, and it's often not the fastest one. I've worked with buyers who waited years longer than they needed to because nobody mentioned FHA's shorter timeline. 2 years for bankruptcy, 3 years for foreclosure, or if they were still inside that window, that non-QM existed as a bridge. That's years of rent payments, years of not building equity, years of watching properties they wanted to appreciate away from them. The right answer, every time, is to call a lender who works in FHA, conventional, and non-QM programs and ask specifically, hey, given my credit event, what's the earliest date I can qualify for FHA, and is there a non-QM option if I can't wait that long? Get real dates, build toward them, and don't assume the conventional answer or even wait for FHA is the whole picture until you've asked.
What should someone do right now if they're in this situation? Or if they have a client in this situation?
Okay, if you're a buyer, find out your exact discharge or completion date for your credit event. Then call a lender who does FHA, conventional, and non-QM and ask 3 questions. When am I eligible for FHA? When for conventional? And if I want to buy before either of those dates, what does non-QM look like? Get all 3 answers. The gap between them is your real window. If you're an agent with a client in this situation, don't assume conventional is the only path, and don't assume FHA isn't available just because a bank told your client to wait. That call takes 10 minutes. It might save your client 2 to 3 years. You see, I do this analysis for free, so call me with the situation and I'll tell you exactly where the client stands and what the realistic timeline looks like. FHA, conventional, or non-QM.
Where do they reach you?
You can reach me by scheduling a direct call with us at teamaronheim.com. If you've had a credit event and you want to know the real timeline, not the conventional bank answer, but the actual earliest date you could be in a home with FHA, that's a 20-minute call and I'll give you the real answer. Or text me at 720-248-6892. A bankruptcy or foreclosure is not a permanent door. FHA usually gets you back in faster than people think. Let's find out exactly how long your timeline is.